Hello everyone, welcome back to our channel. In this channel, normally we talk about personal finance, budgeting, saving, investing, and full-time job and side hustles. And in today, in our topic, we're going to talk about some tips, financial tips that will change your bill of seeing money.
So we found this we put down a couple of different tips, and it's kind of useful, and it's really related to our topics and what we do for
Daily basis,
yeah. So if you like this type of content, guys, don't forget to subscribe, comment. That'd be muchly appreciated. So the first tip. So you want to go ahead for the first one?
Okay. So first, create a financial calendar. I think we just started doing it few months ago. Like, I think it's important, we understand it, but then we just started kind of realize it's important earlier this year, because then you have big bills coming in, for example, insurance coming, or rentals, or these big lump sum of money coming in. You have to put it in your calendar.
At one stage, we didn't know where the big bills is coming in. So when we knew like a certain month is like, it could be a heart attack.
We were just waiting for the heart attack.
Yeah.
So we were not being prepared. And now we'd rather be prepared. We know, these few months, we're going to have big bills. We don't spend as much.
Yeah. So, and I kind of, based on that monthly calendar, I obviously, then this month we expected to hit, let's say, $10,000 of expenses. So be sure that we actually have that surplus ready to go before that month actually comes.
Yes.
And we keep on evaluating it, and instead of just as a shock, it's like, oh, you got 2 weeks to make that payment. Like, okay.
So when we receive the bill, we can just pay it. When we receive it, we pay it. Before we were like, oh, we have to save all this money because we allocated money in somewhere else.
Yeah.
Then we were just being very passive at that time, but at least now we are prepared, so we know what we're doing.
So, and if you do have a mortgage, check out your interest rate. Sometimes it's actually better off if you actually go from one bank to another bank if you're shopping around to get a cheaper interest rate. For us, we're changing it from interest only to principal and interest repayment. That actually motivate us to pay off our mortgage quite quickly. And not just that, it's like an incentive. I think it was like, let's say it was 4% if it's in interest only, and then it was like 3% or something.
Yeah, it's lower interest rate when you pay principal and interest in Australia. I'm not sure in other countries, but there's an incentive. Back in, I think, almost 5-10 years ago, the bank, they encourage people to pay off the mortgage, even it is investment property. So they incentivize. Yes, they motivate you to have a lower interest rate if you pay principal and interest only, because it's all these structure for tax return purposes, so people tend not to pay off the principal. Back in the days, we have some friends, they still
prefer that.
But it's everyone's strategy is different, but for ourselves, we just feel like financial and burden wise is a lot better if we pay off the principal as well.
Interest. So, and if you're actually on a credit card debt, sometimes you can go shop around and you'll be amazed in some bank. They actually provide you with, like, say, a certain balloon period where there's no interest occurring, where they just freeze to do a balance transfer for 12 months or 24 months. You can get 0% interest rate. That's might be a way for you to tackle your debt. I did that. You did the same thing for your teeth.
I had the cash at that time, but then it was just, back in the days, just trying to maximize and stretch it. So I had the cash, but I didn't want to pay off. It was $7,000 for Invisalign. And then I used the card to get points, and then once done, and transfer the money to a balance transfer. So, but within that 6 months or 12 months, I just paid it off.
For me, I borrowed a big lump sum to buy a car, let's say, and I wasn't able to pay it off in one hit. Instead of paying that interest, I just transferred to another bank and was able to save 12 months of interest repayment.
But wouldn't it be stressful though sometimes?
Because
what if you know that you cannot meet the period, and then you can't find something that's suitable, you have to pay for it.
There is like other people that I know of that they just want to get I guess, head above water, let's say, having that no interest payment does help a lot.
Yeah.
And you just try to tackle as quickly as much as you can, hustle to get an extra income or so. So the next one is also track your net worth.
That's
so for
what
us,
we've been doing for 2 years. I think we're slowly just tracking our cash, how much we have in bank, or how much that we have, like kind of starting our budgeting journey in that time. But then we read a lot of these articles or watching YouTube. Actually, we have to track our net worth. So we put our super in there, our investment, like the value of the properties, we put it in there as well. All
and then our
investments,
ETFs, our return on our, I guess, investment, any other area, not just the property. Whether we actually spending too much on the month, or you know, what is the big expense on that month, and is it growing?
The main thing is your net worth growing? If you can see that, it's just not visualizing, you can see it's happening. I know it takes some time, but you can see small steps that motivate you to go towards to your main goal.
It's an overview for us to see where we're at currently. Are we going higher? Are we going lower? Are we, you know, in a good book, let's say? Are we growing? Are we not growing? Is it a plus or a minus at the end of the month? So it's an open book for us. It gives us, I guess, like a financial report in a monthly basis.
Yes. Just like the company, every month they do profit and loss, or not that's yearly, but they do budgeting and they track how much they've spent, how much the income as well. So that's what we are doing for us as well.
So I remember I used to work in sales, and in the sales you have a target to achieve. So for us, it's like, this is our benchmark, this is where we're at. Okay, what are we trying to achieve next month? How can we increase our net worth, or what do we have to do in order to cut down costs? Are we expecting any huge amount of expenses coming in? So that helps when we actually sit down and, I guess, as a couple, for us anyway, we open book at least once a month or once a fortnight to do that. Depending,
you can log into my account, I can log into your account.
But like having it in a spreadsheet, like an overview of everything, it helps a lot.
So we just consolidate everything and see our net worth.
That's it.
Time to do that soon, I think.
We're nearly the end of the month now. So
next one, set a budget and the time as well. So sometimes I know it's boring, maybe the budget work, but you have to. That's how you start your financial journey, like independent journey. You start from budgeting. You have to make sure you know that you have certain of amount coming in, and make sure that it's bigger than what your expenditure. If you don't balance it, then you will never go there.
You'll never be able to go ahead if you're spending more than what you have.
Correct.
So
and also you have to have a time limit for yourself. So like every day, every week, every month, you don't just do it for a short period of time. I
mean, for us, we do set a budget on, like, for example, for our biggest purchase would be a brand new car. It's been in the order for a long time. When you hit the go purchase the car, I was nearly having a heart attack because I don't know where is this money coming from. So, and then after we sit down and actually figuring out, okay, it's doable, because if we look at the big amount in one lump sum, like, and then we chunk it down and like, hang on.
I think you just need time to digest and do the calculation and the budget. So if you have that goal already, you just try to figure out, okay, how much do I need to save? And then divide it to each month or each week. Then you put it into your saving or goal.
That's it. So because we get paid on a weekly basis, we just look at, all right, then, so based on each week, we should be saving this amount in order to be able to afford the car in cash versus in finance. We try not to take any finance when it comes to depreciating value product, as you will be going backward. And some people, say, it's much better doing the finance because you could, use that money to do other things. That is correct for some. But for us, this is just our way of doing things. And so far, it's kind of helpful, not having in debt and not having like any other payments, let's say.
Yeah, you sleep pretty well every night.
So, and to us, like, if you know your budget, you should not be you should not be using a credit if you know how to budget.
Correct.
Yeah. So the next one will be consider all cash diet. Now this is a theory that we actually just tried today. We went to the shops today doing our grocery shopping with our kids.
It was started from yesterday. You know, we went out for dinner.
Oh yeah, okay, go on.
We went out for our date night in 7 years. I think the second time, I can't believe it. Two months in a row.
Yeah, we were able to
go out without the kids at night time. Without using babysitter. We were using our friends, so we just taking turns. That's another way of saving money.
Yeah, it's like for us instead of having a babysitter, you don't know what they're going to be like, and
they stay in your home, and then you're going to interview them if you're comfortable or not. So we just how about we take turn? So this month is you, and next month is us, and just put the kids together in a park for a bit, and then go to home. They're home to have dinner and play for a bit.
That's it.
Everyone's happy. Anyway, so we went out for date night, and I know a majority of the restaurant now they charge credit card surcharge.
Actually, the first month that we went out.
Yes.
There was a credit card surcharge, and I didn't take a notice of how much it was. I just tapped it, and then when we did the calculation, I'm like, hang on a second, that's an extra this amount, with an average of 2 to 3% every time you use your credit card, let's say. That can add up.
Yeah, it's add up a lot.
Yeah.
Well, for example, yesterday we went for the restaurant. Before that, I was okay. Sometimes they charge. I took some cash with me. I just perfect. I don't know why did I plan it perfectly.
Yeah.
And then when I opened the bill, I think that's what I got in cash. And then I look, and then they say surcharge for the bill will be 2% per transaction, and it wasn't a small bill.
Yeah.
So and I said, no, I'm not going to pay credit card with it. I'll just pay all the cash.
Yeah, I was quite amazed that we actually have the cash.
Yeah.
Okay, gotcha. And I think even the waiter, it was like automatically just go straight to the machine and start typing in whatever the bill was.
No.
And I'm like, no. He's the cash. And they just, because it was in a smaller notes, it was like, okay, so that's like 5, 10, 15, 20, like, okay, then a mixed domination between 5, 10, 20, and $50 or whatever it was. Like, I'll be right back.
And it took forever. Why did it take so long? I was like, does he not know cash?
Obviously, because I'm not used to it. It's very rare. I'm like, oh, okay, gotcha. So they had to count it.
So we started from there. And then now we try to carry a bit more cash because of this credit surcharge fee that I'm not comfortable. Why do I have to pay that fee when I have that money? It's my money. If you charge me, then I'm not going to pay for that. I'll get cash. I know it's not as convenient, but actually it's a good way for you to go within your budget because you only have that cash amount.
The other example also, our kids start earning pocket money doing other chores around the house. So today we went to the shops and they actually wanted to go out there and just go out and spend. Yeah. That was part of the money jar things that we do.
The fun jar that they can spend, whatever.
So we teach our kids you got to split your money in a certain number of ways. One of the split is actually to spend. You can go out there and have fun. Yeah. And spend it like, I guess, so that way you don't feel like you just save.
Yes.
So especially I realized that when I looked at my son, he always save a lot. save. He doesn't want to spend.
Oh, so when he spend a lot.
Yeah. But at the same time, because they haven't been exposed to credit, when they look at a product, if they can't afford it, they cannot afford it.
Yes.
For example, I think they have $20 or something. And if a toy that is exceed the $20, $30, $20, even $21, if it exceeds just $1, they just look at it, oh, I can't afford this.
Yes.
So
and that's the word they say, I can't afford it. Okay, I have to put it back.
Yeah. And this, to us, it minimized the I guess, that nagging and crying feeling. Because like, hey, you have the opportunity at home to work. There are chores at home. If you can't afford it, if you don't have enough, you don't have enough.
That's right.
And they kind of realize that, and they only choose toys that they're going to purchase on their budget. So I was quite proud of them due to that.
Well, even though we don't agree of their selection, but we have no say. It's
Yeah.
the money.
It's their money. I mean, they do actually invest, they do save,
Yeah.
and they do need to
That's
spend.
the spend.
It's like that's their spending.
They're entitled for it.
So, and I'm proud of them because they didn't even look at us and go, hey, can I borrow money of you? Or
Yeah.
hey, can I borrow, that extra, whatever it is, to get that.
Yep.
So it helps a lot if you try to do a pay in cash. So, and then
Yep.
I think that's about it on this video, guys. This is a multi-series or so. So this is part 1 out of, I don't know how
Some
many there
tips
is.
that, I don't know how many, but
Yeah.
some tips that will change your think about money.
If you like this type of content, guys, don't forget to subscribe, and I'll see you on the next video.
So yeah, bye-bye.
Bye.